Hello, everyone. Welcome to EPK Capital. Here we simplify wealth management and investments so you can build wealth for generations. As a bonus, I have created an in-depth guide to the 7 costly tax traps for high net worth NRIs, a strategic report on avoidance and compliance. You can download it simply by clicking on the link in the description. Let's get started now. Good morning, everyone. Welcome back to the channel. Today is Wednesday, December 10th, and we are breaking down a wild 24 hours in the markets. If you're waking up wondering why Nvidia is popping or why Asian markets just took a dive, you are in the right place. We have a massive show today covering the calm before the storm with the Fed, a shocking reversal on chip exports from the White House, and a GDP disaster in Japan. Let's dive straight into the numbers. First, let's look at the scoreboard. Yesterday, US markets closed with a case of the nerves. The S&P 500 dropped 0.35% to close at 6,846. The Dow shed nearly 0.5%, and the Nasdaq slipped just slightly. Everyone was keeping their powder dry ahead of the big Federal Reserve decision later today. Overnight, the action moved to Asia. It was a mixed bag. Japan's Nikkei 225 managed to defy gravity, closing up 0.14% at 50,655. But over in China, the mood was somber. Hong Kong's Hang Seng Index took a hit, falling nearly 1.3% to close around 25,058, and the Shanghai Composite drifted down 0.37%. Investors there are nervously waiting for headlines from Beijing's Central Economic Work Conference. In Europe, we're seeing a split screen right now. The DAX in Germany is up about 0.5%, while the UK's FTSE 100 is flat, hovering just above 9,640. Now let's talk about the macro events driving this price action. The elephant in the room is, of course, the Fed. We are hours away from the decision. Markets are pricing in a rate cut, but the real game is the guidance. With inflation data looking sticky and the labor market cooling, traders are terrified that Powell might signal a pause for early 2026. That anxiety is basically putting a lid on any big rallies right now. But the real shocker came from Japan. We got final Q3 GDP numbers and they were ugly. The Japanese economy contracted by an annualized 2.3%. That is significantly worse than the 1.8% initial estimate. This puts the Bank of Japan in a nightmare scenario. Do they hike rates to save the yen or hold rates to save the economy? Meanwhile, down under, the Reserve Bank of Australia held the line. They kept rates at 3.6%, with Governor Bullock basically telling the market, don't expect a cut anytime soon. Inflation is still too hot for their liking. Moving on to politics, and we have a massive development that's moving markets right now. President Trump has made a major pivot on tech trade. In a post yesterday, he announced that he has informed President Xi Jinping that the US will allow Nvidia to sell its powerful H200 AI chips to approved customers in China. This is huge. For months, the semiconductor trade has been battered by fears of stricter export bans. This reversal is a green light for Nvidia, which jumped 1.7% in pre-market trading. This could be the catalyst that wakes up the tech sector after a sleepy week. Domestically, the administration also announced a $12 billion Farmer Bridge Assistance Program. This is designed to help U.S. farmers coping with market disruptions. Code for trade war fallout. If you're trading agricultural commodities or equipment stocks like Deere, keep an eye on this liquidity injection. Let's check in on crypto. Bitcoin is currently consolidating in a tight range between $91,000 and $92,000. We are seeing a classic symmetric triangle pattern on the charts. For the non-technical traders out there, this usually means one thing: a big move is coming. The market is coiling up like a spring waiting for the Fed announcement. In terms of news, BitMEX just made it easier to get into the game. They've launched a new fiat to crypto on-ramp with Mercurio, meaning you can now buy crypto directly on their platform with credit cards and Apple Pay. It's another step towards reducing friction for retail traders. So, what is the trade for tomorrow? Everything, and I mean everything, hinges on the Fed at 2 p.m. Eastern today. If we get a cut and a dovish tone, expect risk assets like tech and Bitcoin to fly. If Powell sounds hawkish or hesitant about 2026, we could see a rapid repricing to the downside. Watch the 10-year Treasury yield. If it spikes post announcement, that's your signal to be careful. That's your market update for today. If you found this helpful, smash that like button and subscribe so you don't miss our Fed reaction video later today. Good luck out there, and I'll see you in the next one.